Yo, what is good, everybody? Welcome to day 10 of the Nick Graves Trades Bootcamp. Today, we're going to go over kill zones and the best times to trade. Sorry, ICT concepts that make the most sense. Because obviously, a lot of times people ask me like, "Hey, Nick, like, how do I practice? How do I get better?" And I'm like, just trade the times you're supposed to be trading. If you're trading at 6 p.m., 7 p.m., those probably aren't the right times to practice. The right times to practice is going to be New York session, right? And that's what I'm going to go over. And I'm going to go over the session that I do the best in and the session that makes the most sense for me to trade, because the kill zones and the times make a lot of sense, for ICT. Especially time matters. Time is very, very important. I'm also going to be covering macro in this video as well. But understanding that time and price, being able to put the two together is very, very key, right? So first off, I want to talk about like the main times to trade. So I guess the first one is like 5 minutes before market. I'm gonna break all these down individually. So 5 minutes before market open, 2, market open, 3, macro. 9:52, 10, 10. So in my opinion, these are the three main times you should be trading. After 10:10, I normally shut off the charts because normally it's pretty cooked, and I'm gonna go over why in this video. And then I guess I'll put 4. I'll do 4, just end of day macro, just for some extra sauce for you guys, because I love you guys. Cool. So first off, 5 minutes before market open. Why 5 minutes before market open? Because a lot of times you will see some sort of specific PD array form to go short, right? Like just an example, right? We have this, like today I was looking for shorts. So 5 minutes before pre-market, it's 9:25. We get like an inverse fair value gap or whatever, closes below, like right here. And then like you wait for, obviously, at least me, I wait for some sort of like entry, and you get the entry, and then obviously market wakes up 50 points. So most likely you get stopped out, but this isn't really like the best case. But 5 minutes before market open, even like sometimes 1 minute before market open, we'll get some sort of like fair value gap or order block. And this is what a lot of people in my comments have said, like, this is like gambling. It really isn't, because if you know where the market wants to go, why not utilize the volatility of market open? Because it's just free money, bro. Like if you know where the market wants to go and you use what I teach you, I mean, it's free bread at market open. Most of you guys see me I'm done in the first 15 seconds sometimes of market open, right? So like example today, all we did was we swept these relative equal highs right here. We also swept these relative equal highs over here. We mitigated the 1 minute CSD. And all we did was respect the 1 minute fair value gap, and then we reversed the rest of the day. Like this was high of day that we caught in the Discord. Like I streamed this in front of all my students, right? Like literally, it was the freest short ever. And that kind of leads us into market open. I kind of did a brief, but like again, 5 minutes into market open, you just look for PD arrays kind of going in your direction where you think the market wants to go, and you try it out. Sometimes it works, sometimes it doesn't, but again, you de-risk. Number 2 is market open. And market open, I'm going to go over that next video. I'm going to go over a Judas swing next video. I'm not going to really get into much today because that would ruin the video for tomorrow. But for market open is always either a manipulation or a distribution. So market open is going to do one or two things, guys. Every single time. You can back test this for years. It is the same exact thing every single time. Market does one or two things every single open. Market either manipulates, which I'll be going over tomorrow, or market distributes, right? When market manipulates, we have some sort of liquidity or PD rate to fill before going lower. Example here, we swept relative equal highs, we hit a 1 minute CSD, we respected a 1 minute fair value gap, and then boom, what happens? We dump 300 points. That is, market did not manipulate enough pre-market in order to basically continue. So market open manipulated, and then we get the distribution after. Again, what did I teach you guys last video? Power of 3. Accumulation. Let me get rid of this. Manipulation. And then we get the distribution, right? Again, the power of 3 is everywhere, guys. Like the power of 3 is everywhere. Boom. There's a prime example of power of 3 right here. Cool. Boom. But if there's a market open distribution, and I'm going to go over yesterday, this was a prime example of market open distribution. Okay. I'm going to go over this. 7th. Sorry, it was Monday. It was Monday. Tweaking. I'm tweaking. So, okay, so here we go. This was market open distribution, right? Right here. This was a very, very important low that I had marked out. And it was paired with a 15-minute fair value gap. So there was a couple of confluences. It was also in discount of the range. Look what happened. We swept it. We rejected. I entered. I had a 7-point stop. That was the manipulation. Now, look what happens. Market open distributes, right? So if there's pre-market manipulation into a key level, then market open is going to distribute, right? This is a prime case scenario of market open distributing to buy side. You can see here, we take out this buy side, that's where you take TP. And just like that, it's about how much of a trade? Like 100 points, basically. 100-point trade, just like that, just because you caught the market open manipulation. Again, this is not gambling. This is literally understanding where the market wants to go and utilizing ICT concepts to your advantage, right? So that is a very, very good key example of kind of like how the market open kind of works. Again, I'm going over a lot heavier into the Judas swing tomorrow. Next up, we have the macro, 950 to 1010. So I actually used to only trade during this time, but this time is very, very, very key, right? I want you guys to understand that 950 to 1010 macro is important. Why? Because it does one or two things. Again, I taught you guys macro. The hell? One sec. Macro will do one of three things. Macro is going to continue, reverse, or rebalance, right? That's it. One of three things. So in this case, this is like our macro, right? And again, I used to only trade the macro. That used to be like the only time that I traded. So in this example, I'm gonna do this. Boom, boom. This is our macro time, right? I just want you guys to kind of see what happens. So we have our 5-minute. We have a 5-minute order block. So what do we get in this macro? We get a 5-minute retrace to continue lower, right? So right here is our 5-minute order block. I'm gonna mark that out. Look what happens. Price comes into the order block, respects it. We even create fair value gaps to fill if we want to. We never do, but this retracement is enough to fill the order block and continue lower. In this case, we were targeting the sell side in an unfilled 4-hour. So we rebalance a 5-minute order block, and then we continue down another 170 points, right? That is a very, very important level or time, sorry, because every single time you guys see something happen, it's at macro. Example, we had this reversal off of a very important level that I had right here. Oops. Boom, boom, boom. Okay. We had this hourly low, right? Hourly low. Obviously, we dig into it pretty deep, but as soon as we get some sort of like inverse out of it or a 1-minute CSD, look what happens. So like whatever, you can say like IFEG, whatever, blah, blah, blah. The macro works here. Look, we sweep the level, we come up, inverse it. We also create this is ICT 2022 for those who trade it. There's your market structure shift right here. Market structure shift. Oh my gosh, I'm going to freak out. Market structure shift. And you have fair value gap. Look what happens. Price closes above this high, comes down, continues higher, right? And this happens during the 10:10 to 11:10 macro. Obviously, lunchtime macro is less volatile, but still, I mean, it works. And again, here's your entries. You get the 1-minute CSD. You get the 1-minute CSD. You get the 1-minute IFEG. You get the 1-minute fair value gap. Then you get order block continuations higher, right? Time matters. Macro matters. 950 to 1010 and 1050 to 1110 are the two best macros. But in my opinion, end of day macro is just some extra sauce I'm going to throw at you guys just for the fun of it, because this thing can be very, very clean sometimes, guys, like stupid clean. It is the end of day. So obviously like it's a little bit less volatile, but this is kind of like what you can expect when trading end of day macro, right? So I'm not going to use today because it wasn't that good, but yesterday we had a very good end of day macro, if I remember correctly. And yes, I want you guys to see what happens. We're clearly bullish, right? We close above this high, okay? Right here. We create a fair value gap. Look what happens. What time is it? 1550. 1550 to 1610 is the macro. Look what happens. We come down, we respect the fair value gap, and then we continue, another, 96 points higher. And that's end of day macro. Because look, time frame is clearly bullish, right, guys? Clearly bullish. And we're targeting this high right here. And look what happens. You easily get it. It's bread and butter. So end of day macro is also something else you can take a look at. But again, this video is really just going over the main times to trade. Again, 5 minutes before market open, if you know where market wants to go and you see market open, get a clean manipulation before market opens, you can take that anticipating to reverse or manipulate. Market open, that's the Judas swing. I'm going to be going over that tomorrow. Again, I'm not going to get too in depth about it, but understanding how a Judas swing works. And then the macros, I mean, it doesn't have to just be 950, 1010, but 950 to 1010 is the easiest one to trade because there's either a reversal, continuation, or a rebalance. And then end of day macro sometimes can be pretty clean if you need to like half pass an account or something, or if you still need like a $150 day. In my opinion, these are the 4 best times in the kill zones to trade. I do not trade silver bullet personally, but this is, in my opinion, are the 4 best times that I'd like to trade. And yeah, guys, I hope you guys enjoyed the video. Again, this is day 10 in the Greatest Trades Bootcamp. I really hope you guys are enjoying this. Make sure to comment on your biggest takeaway from this video. Make sure to like, comment, and subscribe. Love you guys, and I will see you guys in the next video. Peace.